Let's talk about cryptocurrency, the so-called magical internet money that captured the imagination of millions and promised a new era of financial freedom. It was supposed to revolutionize finance, disrupt the old guard, and make a lucky few fabulously rich, while countless others watched their savings evaporate overnight. Bitcoin soared to an eye-watering $126,000, and people everywhere quit their jobs to become full-time Dogecoin analysts, chasing dreams like professional lottery ticket scratchers, convinced they'd found a shortcut to wealth. But on October 10, 2025, the music stopped. The crypto market swan-dived into chaos, with $19 billion in leveraged positions wiped out in just 24 hours, leaving devastation in its wake. This crash was 9 times larger than February's disaster and a staggering 19 times bigger than the infamous FTX collapse, shattering records and confidence alike. In the aftermath, 1.6 million traders had their accounts forcibly closed, triggering a brutal, relentless cycle of doom and margin calls. The crash exposed the fragile, hyper-volatile reality of the crypto market, where fortunes can vanish in seconds and stability is an illusion. It was a harsh, unforgettable lesson in speculative mania, colliding head-on with real-world risk, leaving many to question if the dream was ever real. The causes? A perfect storm of politics, unchecked greed, and faulty technology, reminding us that even the boldest revolutions can come crashing down. How did this financial train wreck unfold? Let's rewind and break down the chain of events that led to this unprecedented collapse, step by step. It all started with a tweet-like announcement that sent shockwaves through the financial world, catching everyone off guard. President Trump declared 100% tariffs on Chinese imports and threatened to block key US software exports, escalating tensions to a fever pitch. The trade war returned with a vengeance, sending global markets into a tailspin and erasing billions in value within minutes. The crypto market, supposedly a safe haven in times of turmoil, reacted like a vampire at a garlic festival, panicked and chaotic. Bitcoin plummeted over 15% in just a few hours, crashing to a 4-month low and shattering investor confidence. Ethereum tumbled 21%, and altcoins like Dogecoin and Trump coin imploded, wiping out months of gains in a single day. Automated systems kicked in, force-selling assets at lightning speed and creating a vicious feedback loop that accelerated the crash. The market wasn't just falling, it was eating itself alive, with panic selling feeding on itself in a relentless spiral. This cascade of selling turned a bad situation into a historic catastrophe, the likes of which hadn't been seen in decades. The crypto market's supposed invincibility was shattered, leaving investors stunned and the world reeling from the aftermath. What caused this financial horror show? How did the crypto market unravel so quickly, leaving even seasoned investors stunned and scrambling for answers? It all started with a toxic cocktail of 3 key ingredients. First, geopolitical instability sent shockwaves through global markets, shaking investor confidence and making everyone nervous. Trump's sudden tariff announcement revealed just how deeply crypto is intertwined with traditional finance. Second, insane leverage. And the market was drunk on leverage, with traders borrowing huge sums to chase quick profits. When prices turned, that leverage amplified the crash, turning a dip into a disaster. $19 billion in liquidations vaporized borrowed funds in a matter of hours, turning what could have been a manageable downturn into a full-blown collapse. Third, technical failure. Platforms like Binance, the world's largest crypto exchange, crumbled under the pressure, leaving users locked out and unable to act during the panic. A major stablecoin lost its peg, sending shockwaves of fear and uncertainty through the entire ecosystem, as people questioned the safety of their digital assets. All these factors collided, creating a perfect storm that exposed crypto's deepest vulnerabilities and left the market in chaos. The crash wasn't just bad luck, it was a systemic failure that had been building for months, maybe even years, waiting to happen. The market's foundation of hype, unchecked risk and shaky technology was finally laid bare for all to see. Now, regulators are circling, determined to scrutinize Binance's role and prevent another meltdown like this from ever happening again. In the end, the crash was the inevitable consequence of a flawed system, one that ignored warning signs until it was far too late. After the crash, the crypto landscape was a mess, with investors fleeing to tangible assets like gold and silver. Prices for these metals hit record highs as capital fled the digital world. In the crypto options market, traders bought puts, betting on further price falls. The short-term outlook turned overwhelmingly bearish. However, not all assets were treated equally. While altcoins bled, Bitcoin saw relatively strong investor flows. This suggests a strategic retreat to perceived safety within crypto. The crash acted as a filter, forcing a re-evaluation of risk. Despite the carnage, true believers argued this wasn't the end. Some called the crash a healthy correction, clearing excessive leverage. Analysts like Jeff Kendrick still predicted Bitcoin could reach $200,000. This relies on specific circumstances, like the Fed cutting interest rates. Meanwhile, Hong Kong approved its first-ever spot Solana ETF. Other jurisdictions are creating new, regulated pathways for crypto investment. Innovation continues, with Chinese AI models dominating crypto trading. In DeFi, projects like Aave DAO are trying to stabilize prices. Amid the chaos, some assets thrived, like Binance's BNB and Zcash. Even in a crash, there are winners, losers, and weirdness. What are the lessons for the crypto-curious? First, it's unbelievably risky. The dream of getting rich quick is a dangerous fantasy. Invest only what you're prepared to lose, like an expensive casino trip. Be suspicious of leverage. It's a weapon of mass financial destruction. The crypto market is swayed by politics and global economics. Bitcoin's safe haven narrative took a massive hit. The crash is a warning sign of crypto's immaturity and volatility. The technology will evolve, but the road ahead is rocky and risky. For ordinary investors, the key takeaway is caution.